Tough times for the original meme stock. I'm Lisa Bernhard with Reuters, and I'm joined today by Michael Landsberg. He's Chief Investment Officer at Landsberg Bennett Private Wealth Management. Michael, shares of GameStop are down today on the back of earnings. We remember GameStop as the original meme stock back in 2021. Shares were over $480 at their peak. They're $13 roughly today. What is the status of the meme stock? Do they still exist?
I would tell you, I think, and certainly in the last week or so, I think they're kind of back alive and well, both with Reddit and the Trump DJT coming out, on basically big valuations and no earnings. At one point, I would argue they made GameStop look like a real solid business. GameStop's down today because they should be. They reported negative year-over-year earnings, stocks going down. But there are certainly some excited investors looking at Reddit and DJT and saying, hey, I want to be part of it, and maybe lightning can strike twice. At the end of the day, fundamentals matter. And I think before we get too crazy on these other new two, I think you're going to want to see what the fundamentals are. We always knew the fundamentals of GameStop were rough to begin with. And so now as the stock starts to kind of go back down and head ultimately towards zero, the fundamentals will catch up. But meme stocks seem to be alive and well.
Stocks are up at the moment, and we've been hitting all-time highs recently. Even Bitcoin recently has been making all-time highs. Are things a little too frothy, do you think? Are we due for a pullback?
Bitcoin, the movement of Bitcoin always seems to be, a beta of twice what the tech market is. So if tech's doing well, Bitcoin seems to do really well times two. But I would tell you, I think tech actually, the S&P had, roughly 8% earnings year over year up. NASDAQ was over 30. So when I look at that, I think there's a lot of businesses that are doing really well. Earnings are flowing to the bottom line. AI is just kind of starting. So I'm not thinking that we have to have a huge pullback. Certainly, a breather here and there makes some sense. But I think the market's got legs here because there's earnings. And for a while, I was concerned that where the earnings is going to come from. It seems like in specific sectors, AI has started to translate into real earnings. And for the companies that are going to deliver earnings via AI and things like that, I think that they're probably priced too cheaply. I think what's going to happen is we're going to find who really has an AI deliverable, and they're probably going to fall by the wayside. But I think there's certainly some legs here, and yeah, it's a little bit exciting, and people get, but I wouldn't use the word frothy at this point.
The personal consumption expenditures price index is out on Friday. Markets are closed because it's Good Friday. What do you expect to see, and do you think that it could potentially at all alter a June rate cut from the Federal Reserve?
My belief is the Fed's pretty much gotten the last 3 months wrong in inflation. I think inflation's going up. Every data point that we look at, not every, but most every data point is saying that things are starting to move higher, not lower. And so, I really wonder, they start stripping out everything under the sun to get it to be what they want. But in reality, I think prices are moving higher. The CRB index is moving higher. I question, with stocks at all-time highs, unemployment being as low as it is, do they even, lower rates here in June? I've been in the camp of a lot lower than most people. And so I'm probably down to 1, maybe 2 cuts this year. And I think as you get closer to the election, I think you're going to see less and less chance of that, because anything you get close to the election, I think you're running afoul of having people talk about, helping one candidate or another. So I think maybe you get a shot, in the summer to get one, but probably not much more than that.
But do you see the overall trend of inflation continuing on a downward slope?
I would say I'm in the camp. It's more, more sticky. We use the CPI is what my firm uses to kind of benchmark like headline CPI. I don't see that being below 3.2 before the end of the year. So I think it's pretty much going to stay here. You're going to have parts of the market, I think, that will see inflation, go up a bit, some things that will come down. But by and large, I don't think it's going to move a lot quicker, lower, and I think it's going to stay here. My belief is it's almost like that last mile on a deliverable. It's easy to move product across the country. It's that last mile of getting it to your house that's a problem. I think this last, let's say, 0.5 percentage point to 1% on inflation is going to be very difficult. Moving from 9 to 3 wasn't that hard. Getting from 3 to 2, I think it's going to be very, very difficult for the Fed to do. And it may take, a year and a half to get there.
So what does that mean for the economy and stocks?
I think, I've always been a believer the markets trade on earnings. And if we're seeing earnings continue to do what they've done, which has been strong, and again, certain pockets, I think that's where you're going to want to be. I think it allows investors not to have to run and buy duration in fixed income, because I don't think rates are dropping next week. So I think there's an opportunity for people to be patient in this environment, look for stocks that are going to have some good growth and be able to take advantage of that. So there are pockets that we certainly want to stay away from. I think there's, part of the the real estate market, specifically in some of the commercial office space, I think there's some areas that you're going to want to be concerned with. There's a lot of growth in the economy, and I think that's what you want to focus on. And the fact that rates aren't going to come down that fast, in my opinion, means you don't have to run and buy, everything tomorrow, because you have an opportunity to get paid while being in cash.